Hi, Chris Peterson here with Ryan. Something we're finding is happening a bit more in the current market with Fed interest rates have moved up from where they were, mid to late last year, is some people are definitely wanting to make sure that they've got access to their mortgages on an interest-only basis. And what is happening, a lot of this has been driven out of Australia. Over there they have regulated interest-only loans, so a maximum of only 30% of the market can have their loans on interest-only. And we are starting to see some of the banks tighten up more in this area.
What we've seen across quite a few different lenders is that in some cases it can depend on a client's situation as to whether their interest only is approved. Usually the way banks tend to find this out is by requesting a full new application in order for a client to continue their interest only period. Having access to surplus cash can be quite beneficial in a lot of people's situations, and understanding the difference between your bank and other banks may be beneficial if you plan on basically looking at that as an option moving forward. Another thing to consider is that in the current market there are also different things that are taken into consideration, like for example your LVR on your property, what kind of property it is, whether it's owner occupied or investment, or just the purpose of the request overall. You can find a lot of different benefits in having access to this.
I mean, one of the main reasons people have their mortgages on interest only isn't just the cash flow aspect, it's the tax deductibility aspect. Obviously investment properties, or if it's for investment or business purposes, you can write that interest off. If you've got personal debt, often against your personal residence, you can't. So it's tended to make common sense to put investment debt or tax deductible debt on an interest-only basis until you've paid your full personal debt off. So if you're in one of those situations, or even just in a situation for where you to retain your property portfolio, interest-only is important. Moving forward, the lender you're with is going to become, quite vital, and what you don't want to do is get a bit of a shock that when you maybe come off your fixed rate or interest-only period, that you're forced onto P&I, because some banks are getting, quite restrictive on that. So definitely feel free to give us a talk if that is going to be quite important for you moving forward.